Welcome back to The Explainer. Today, we are jumping right into a huge historic day for the Japanese stock market. Something really big went down on August 14th, 2025, and we're going to break down exactly what it all means. Okay, let's kick things off with the most important number of the day, a positive 729.05. Now, this isn't just some random figure. This is the massive single-day point gain for the Nikkei, Japan's main stock index. I mean, that is a huge leap, and it signals some serious confidence from investors. And, a leap like that, well, it pushed the market into completely new territory. We're not just talking about a good day here. We're talking about a day that absolutely shattered records. And there it is. The Nikkei index closed at 43,378.31. Let that sink in. This is a new all-time high, the highest point the index has ever reached in its entire history. And get this, it was the 7th straight day of gains. Just an incredible run. What's really cool about this, though, is that the excitement wasn't just stuck with a few big companies. The Nikkei was up 1.71%, sure, but the broader TOPIX index, which, tracks a lot more companies, was also up a really strong 1.63%. This tells us it was a widespread rally. The buying was happening all across the market. So, with the whole market on a tear, who were the real standout performers leading the charge? And did everybody have a great day? Let's kind of zoom in a bit and see which stocks really defined the trading day. Well, the day's biggest stars were pretty clear. Yokohama Rubber absolutely soared, up more than 8% to hit its own new all-time high. Wow. Tokyo Electric Power also had a fantastic day, hitting a 52-week high. And the semiconductor firm Renesas Electronics jumped nearly 7%. I mean, these are just massive moves from major companies. But, and this is super important to remember, a rising tide doesn't always lift all the boats. While those leaders were rallying, some other companies were facing some headwinds. DeNA, INPEX, and LY Corp all saw their shares pull back a bit. This was probably due to investors just taking profits after some recent gains. It's a great reminder of that constant push and pull you see inside the market. So, this brings us to the million-dollar question, right? Why? What on earth came together to create such a powerful surge? So it was basically a perfect storm of positive news. First, new data out of the U.S. showed inflation was cooling off, which immediately sparked hopes that the Federal Reserve might cut interest rates soon. Second, the Japanese yen stayed pretty weak against the dollar, which is fantastic news for Japan's giant exporters, think car makers and electronics firms, because it makes their stuff cheaper overseas. And third, everyone's looking ahead to this huge economic conference. And yeah, that conference is the Jackson Hole Symposium. This is a massive annual event where all the world's top central bankers get together. Investors are basically hanging on every single word, hoping the U.S. Fed chair will drop some clues about future policy. Just the anticipation of good news from this thing added a ton of fuel to the fire. Okay, so with the market hitting a brand new peak, the next obvious question is, what should we be watching for now? The story doesn't just stop here. So let's look at the key trends that could shape the road ahead. This really is the key question, isn't it? A record high is awesome, but is it sustainable? The answer probably lies in a few key areas. Here's what you're going to want to keep an eye on. First, and this is the big one, the U.S. Fed's policy. Any hints from the Fed chair are going to set the market's direction. Second is something called fund rotation. That's basically watching to see if big money starts moving between different sectors, like from those export stocks over to energy or defense. And finally, what's the deal with traditionally safer stocks? And on that last point, some analysts are kicking a theory around. Now, this is not confirmed data, it's just a theory. But the idea is that funds that invest in high dividend stocks, the ones that pay out a steady income, might have acted as a kind of safe harbor. Even in a surging market, some investors are still looking for stability, and these funds, with their solid yields, could have been an attractive place to park some cash. Which leaves us with the ultimate question, doesn't it? After a historic day like this, are we standing on the very top of a new peak with maybe a correction just around the corner? Or is this rally a sign of some real durable strength and maybe just the beginning of a much longer climb for the Japanese market? I guess only time will tell.